Hi everybody and welcome back to my channel. This is Brendan Donovan. I am a real estate agent in Wilmington, North Carolina, and today I wanted to go over 2 ways to buy a home with zero money down. So let's get right into it. So I recently had a conversation with a client. They've been renting for a while and they said, Brendan, I would love to buy something. I don't have 20% down. What can I do? Well, the good news is there's actually a few different options, but the 2 we're going to talk about today are the USDA loan, which is a government-backed loan, which allows 0% down. And the second is a VA loan that also allows 0% down. So 2 really awesome options to help someone buy or get into their first home. It doesn't require much, if any, money at all. So let's get right into it. So the first loan we're going to talk about is a USDA loan, USDA, just like it sounds. This loan is backed by the government and it does allow for 100% financing. So if you find a house that's $200,000, you can actually borrow from the bank $200,000 to go buy that house. There are some stipulations and we'll go over those pretty quickly. I am not a licensed mortgage professional, so please contact a local loan officer or bank to go over these with you, but this is just a guideline or some ballpark statements that can at least get the ideas flowing in case you're looking to buy your first house. So again, we're going over USDA, 100% financing. This is only allowed in specific areas of your town or city. So most of the time, this will be a mapped out area. I will put a link in the description below that will actually show you by address. You can look up and see where you live and what geographical areas will qualify for this. So most of the time, it is going to be something outside of the actual city limits of where you live. So it's going to be, not always outskirts, but a small part of your incorporated city will probably not allow 100% financing, but there should be plenty of area around it that will. So again, I'll put that in the description below. You guys can take a look and see what areas qualify near you. So a couple things with the USDA loan. Like I said, it does allow 100% financing. Some of the other stipulations that you should keep in mind. It has to be your primary home. You can't have another home somewhere else and then go buy another home with 100% financing. This has to be your primary residence. So this type of loan, because basically you're not putting any of your own money into it, is a higher risk for the lending institutions or banks. So what they're going to do is they're going to charge you a monthly fee every month when you make your mortgage payment for allowing you to borrow 100% of the purchase price of the home. So, I'm just using a generic number here. It may be $100 extra a month. As you pay every month, you'll start to build some equity in that home and that fee will reduce over time. You will be charged a fee to be able to have access to 100% financing, but it's still a great option for someone that doesn't have a lot of cash that wants to get started investing in real estate or started buying their first home. This is going to be a fantastic option for you. This loan also allows for seller contributions. What that means is when you buy a house and you make an offer on that property, let's just say the purchase price is $100,000 and they agree to that, you will also have some closing costs. So the bank will charge some fees. The attorney that's going to close or title company is going to help you close your loan and get it registered at the courthouse, depending on the state you're in. They will all have fees involved. So in a normal market, which I don't think we're in now, I know we're in a seller's market. It may be a tough ask to get the seller to pay these fees, but the loan does allow it. So if the market was stable, meaning there's enough inventory for as many buyers as there are, then normally, like I said, on a $100,000 house, you could ask for up to $6,000 from the seller to help you cover those closing costs. So basically, in a stable market, you can own and purchase a house with no money out of pocket. It's pretty unbelievable. So again, that's during a stable market, which we are not in right now. We're seeing more buyers than sellers right now, so that is called a seller's market, and it's going to be tougher to ask for those because someone else will probably not, and they'll probably get the deal. Just keep in mind this is going to be dependent on the market, but the loan does allow for seller contributions, which not all loans do, so that's great. Something else to keep in mind for this, credit scores are always important when you're borrowing money from a bank. For this type of loan, you do have to have a 640 or higher credit score as of today, March 2021. So make sure you talk to your lender, get your credit checked. You need a 640 to be able to qualify for this type of loan. There'll also be what's called a debt to income ratio, which you'll have to qualify for, so you can't have a certain amount of expenditures versus the income you bring home monthly. So, the loan officer you're working with will calculate those numbers for you, and that way you can figure out if you qualify or not. only a few different types of homes are allowed to qualify for this type of loan. So you have a normal stick-built home, those would qualify. You could have a condo, usually a townhouse if they fit the criteria. This type of loan is not allowed to be used on a manufactured home. So if that's something you're interested in, just keep in mind that this type of loan would not work for that property. Sometimes when you're buying a home, you're gonna need to have repairs done. This type of loan does allow for repairs to be done by the seller, but they have to all be completed and finished before you go to closing. So if you do negotiate some repairs on the home, make sure that is all done before closing, or else the bank will not fund the loan or let you close until that's been completed. All right, so the second option for 100% financing is what's called a VA loan. If you are active military, retired military, and or honorably discharged. And you'll of course want to talk to your VA rep for paperwork to get that completed, and you'll also talk to your loan officer about see if you qualify for that type of loan. So this type of loan, again, is also similar to the USDA loan. This type of loan is only for your primary home. So you can only own one home at a time with a VA loan on it. That being said, you don't have to be a first-time home buyer. Own a home in one state, sell that home, and then buy another home in another state or in the same state. As long as you have already sold the other home and paid off that loan, you can go ahead and qualify for a new VA loan. The VA loan, again, is also 100% financing, so you could purchase a home with zero out-of-pocket money. So something to keep in mind with a VA loan, they do charge a funding fee. So usually it's gonna be a percentage of the loan amount. I'm just ballparking here. If you bought a $100,000 home and the funding fee is 1%, that's an extra $1,000 you have to bring in closing costs. It can be rolled into the loan, which is an awesome perk for a VA loan. You actually don't have to have the cash, but just remember, if you're buying a house for $100,000, it actually will be $101,000 if the funding fee is 1%. And so when I say if it's 1%, that percentage is gonna change depending on your status in the military and how many times you've used VA loan program. So check with your loan officer that you're working with just to see what that funding fee is gonna be for that transaction. This type of loan also will allow for seller repairs. Again, they have to be done before closing, but if you negotiate repairs on the purchase of the home, all those need to be done and completed before you go to closing, so keep that in mind. This type of loan also allows seller paid closing costs or contributions. So again, like we discussed on the USDA loan, if you're purchasing a house for $100,000, they will allow the seller to pay up to 4% of your closing costs. So the seller, if you negotiate properly, would be able to give you up to $4,000 at closing to help cover some of the lender fees, attorney's fees, that kind of thing. So another great perk that the VA has. All right, so there you have it. I know it was a quick video, but I just wanted to show you where you can get started in real estate. You don't have to have any money. These are two great loan options that you probably could qualify for if you do your research, or as VA is only for someone in and or have been in the military before. But the USDA, if you can check the local areas around your city, again, I'll put a link in the description below. If you check that, there's a pretty good chance that you're gonna be able to qualify for one of those. Something else I want to remind you for the USDA, there is an income limit, combined household limit. So I'm just using generic numbers here. If they say you have to make under $90,000 a year to qualify for a USDA loan, that is for all people working in the house. So if you're married, you and your spouse together make more than $90,000, you would not be able to qualify for this type of loan. Again, if maybe you're a single parent and you and your child works and your combined income is more than whatever the number is for your state, then you may not qualify for that loan either. So just keep that in mind. But again, the two great loan options for you to get started investing in real estate and or just starting buying your first home with little to probably no money down. So if you have any further questions, comment below, shoot me an email, shoot me a DM, and I'll be more than happy to answer any questions you may have. Look forward to talking to you. Thanks for checking out my channel. If you thought it was awesome, give me a thumbs up and subscribe, and I'll see you guys soon.